my name, Melissa Armo, and then you do new chat, and you can chat me. That's how you will ask questions. See where I put the hi? There's one person. John said I am audible. That is good. Everybody else know how to chat? Okay. All right, let's get started here. People come in late, they come in late. Oh, we got another hi. Ken is there. Rick, I didn't see you this morning in the room. Very good. Well, we're going to get started. It is Wednesday. Another very exciting week to trade. Another exciting day. This market isn't boring. I'll tell you that. Trading, I never thought trading was boring, but I will tell you that there's definitely different periods, different years, different months where trading is more volatile than others, more exciting than others. And we're definitely in that period. I mean, obviously everyone knows what's going on right now with the war. So we'll see what happens. The market had a rally today. But we're going to focus on the topic at hand, stay the course here, and talk about shorting stocks. And a lot of traders mostly go long. I don't know why, but they just do. I never really got into longs, although I will go long. We actually went long today, ironically. We went long silver today as a day trade. But in general, I'm usually shorting. The good thing is, though, that if you know how to go long, you can learn how to short too, and you can make money doing both. You can make money shorting, you can make money going long. So you can make money when the stocks are falling. You can make money when the market is falling. And I think a lot of day traders specifically feel trapped that they always have to go long or always have to trade the trend, and the market definitely is still in an uptrend. But the fact is you can make money doing both directions. The reason that I decided to focus on shorts is because short moves happen fast and quick. And we're going to talk about that today. So we're going to talk about shorting stocks for a living. If you have any questions, you can email me at melissa@thestockswoosh.com. Put my email in here. You can also watch me on TV. I was just on Schwab about an hour ago or so talking about the market. And it's kind of funny because I was listening to what other people were talking about before I got on. And of course, I didn't agree with some of their opinions. So it's interesting because, again, everybody has an idea and everybody has an opinion where things are going. So who's right? Who's wrong? Well, things fluctuate and change. But one thing I'll say for sure is if you don't have 100% conviction in your trades, when you're putting money on at risk in the market, you're dead in the water to start. So again, don't expect yourself to be able to enjoy the process of trading if you don't feel confident and 100% conviction in what you do. I think it's really, really important. You want to enjoy trading, you want to enjoy the process, and it's not fun if you're second guessing yourself all the time. So it's good to understand what to do and to learn it, and we're going to talk about that today. So again, if you have questions, you can email me at melissa@thestockswoosh.com. You can follow me on X, Facebook, YouTube, LinkedIn, and any other place. Probably YouTube is the best place to follow me, though, because I have a lot of videos on YouTube. So any questions as we go along, you can plop it in the room, and I'll answer them. So as I was saying, one of the reasons that I got into trading shorts was because shorts happen very quickly. And I really got into training on the 1 minute chart. So the 1 minute chart has very specific moves. And you can capture those moves in 5 minutes, 10 minutes, 15 minutes, or 30 minutes. And I'm just saying on average, make $1 or more a day. And then make your money and be done and get out. Now, again, for people that want to do options, and this is a whole nother topic, you can buy a daily options expiration, or if they don't have it available, buy the closest one. A lot of these new options expirations, or some stocks are doing the Monday, Wednesday, and Fridays, which is new. It started a couple weeks ago. So you could do the closest one if you want to do the trade as an option, not as a margin trade, which we'll talk about. But it's still the idea of taking the trade for the momentum, okay? And again, this is, almost 20 years of trading. I'm telling you, fact, The first 30 minutes is the only time to me that really counts to make money as a trader. If you don't get it right at that beginning time of the day, I'm talking about if you're a day trader, where you got to get in and you got to be out and you got to be flat before 4 o'clock. Again, very difficult to then capture a move anytime the rest of the day, unless you have a power trend move or a power trend move with the market where you have the market power trending and moving a lot of stocks in any sector. And it's rare that the market power trends. I will tell you that. It's rare that stocks do that too. So can you make a living in the market? Yes, but it takes work. It's not like just getting hired for a job and you start, April 1st and you work and you're in a process and you're learning and then you get a paycheck in 2 weeks. This is not that type of living. I probably got into trading and was comfortable doing it because my previous career was mortgages, and that wasn't a normal job either. I haven't had what you consider a normal job for, 80% of my employment life since I've ever had a career. Probably the only normal job I had was when I was like a teller and a customer service representative when I started out in banking, and then for a year I think I was a branch manager, and then I got into doing mortgages. So all of my careers, or most of my careers, most of my life, it's been about really how hard I want to work or how knowledgeable or skilled I was at getting the job done. So again, trading is about honing it down and finding the right pick, which actually I was able to do today in the SLB, and we got in and got out quick. I really wasn't crazy about going long the market today. Even though the market rallied, I didn't want to go long it. It wasn't a good gap. So I honed it down in something that I did like, got in, got out in a few minutes, so we can go over this trade here today as well. But the fact is, one trade a day is all you really need to do it. And then as you get good, as you grow your account, you add size. So again, obviously if a stock drops $1 and you have 1,000 shares, you make $1,000. Again, add on the size, you're making more and more and more and more. But again, you have to have the money to do it. You have to have the cash, and you have to understand what you're doing so that you feel confident enough to risk the money. Do you know what I'm saying? And again, any questions, just plop it in the room. So anyways, the fact is you can make a living doing this. You can, but it's about being serious and doing it consistently. Times like the market right now, and I'm not just going to talk about this week. I'm going to say since the beginning of 2026. Really, again, the market has been trading down and then in a range and then faking people out, going higher, dropping, and vice versa. If you don't understand what to do, if you're not focused on a set strategy or system and then not getting knocked around by it, in other words, not taking a trade, killing it with a loss, taking it in the opposite direction, killing it, doing it again, you're going to get chopped up. You're going to get chopped up. So times like this, when the market is in a sideways range or very volatile, are the times when you really need to know what you're doing. But I say you need to know what you're doing all the time anyways. I mean, honestly, in any market, you have to know what you're doing. I think people got lazy in 2025 who were going long a lot and buying dips because the market was trending higher and the market made a lot of brand new all-time highs. Even in 2024 and 2025 were bullish years. But again, trading is something that really you should always look at as a skill set career, not something that you can just get lucky. When times like that happen, you can take advantage of it, that's true. But really, to do this consistently over the course of your lifetime, you need a skill set and you need a strategy to do well. And you can do well. When you think about it, there's billions and billions and billions of dollars in the market. And everybody has a different opinion and everybody has a different idea of what to do. So again, if you can hone down on one specific strategy and system to do, or even one stock or one trade, like I'm saying, you can do it. Because you only need such a tiny, tiny, tiny piece out of the market for you to be successful and probably very happy, with the money that you're making. Anyways, getting back to what I was saying, the key to day trading stocks successfully is to trade a system that is reliable and proven. And I feel that my system is because, number one, I've been doing it for 18 years. And I've been teaching people as well for, I guess, about 12 or so, 13. So it's been a long time. And, it's something that you can replicate yourself. It's not something like where I just have an opinion. Like I was just on Schwab and I said, in my opinion, they're only going to lower interest rates once this year, maybe twice, and it'll be at the second half of 2026. That's an opinion. I don't know that for fact. And again, my system is based on chart reading, which is technical analysis, where you apply certain ideas to go through to come up with a pick, a daily pick, a stock pick, and that's something that you can use based on the chart. So it's not like an opinion where I think this or I think that, if that makes sense. So success or failure has a lot to do with the quality of your system. And if you're not using a system, that's really important too. And to me, buying dips is not a strategy. In fact, again, I said this when I get the clip, I'll post it on YouTube. I said this on Schwab with Nicole. If you're buying the dip and you're buying the dip and you're buying the dip, what makes you think it's going to hold? In fact, let me just see if I can bring this up here. Can you see the cues? Without me taking it on, taking it off? Hello. Can everybody see the QQQs? John said yes. Okay. So again, if you're like, well, I buy the dip and I buy support. Okay. So you say, well, I bought support today and I bought the dip yesterday and I bought it. Okay. What makes you think that this, I'm just using this here again, I don't buy dips, but I'm just playing devil's advocate here and showing you that this isn't really a strategy. What makes you think this is going to hold? Like, again, even fundamentally, I don't think it would be difficult for people to logically say that this is a good placement to buy. But even if you thought the war is going to be over, it's going to be over in a week, it's not going to affect oil prices, everything's fine, everything's great, we're winning, blah, blah, blah. What makes you think that this is going to hold here? Right, John is correct. Nothing indicates that. Of course, I don't believe anything I just said to you. I think that the war is going to go on a little bit longer, and I think there's other things besides the war that are going to weigh on markets. But even if you disagree with me, and even if everything's great and the war's over by Friday, what makes you think this is going to hold? Because again, we didn't hold last week. And we didn't hold, I'm just going to take it up. We didn't hold back here. I'm going all the way back. What is today? March 2nd? A month. This is February 2nd. No, today's March, not March 2nd. Today's March 4th. I don't even know today's date. It's March. This is February 2nd. So we're going back approximately a month. We didn't hold here, and this was support, and the market was strong, and it was right off the highs. Again, last time I made a new high was 10.29, but we tried here. We almost did it. But anyways, long story short, what makes you think this is going to hold? You're guessing is my point. You know what I'm saying? You don't know. So you're taking a chance. And there are people that took that chance, because obviously there's people that went long today. But that's not a strategy, because there's really nothing there to indicate that's going to hold. And again, I told you that I will go long. I'll go long plenty of things if I think it's a good setup. But I don't think the market's a good long here. Anyways, how can you become successful day trading? It takes more than hard work to become successful as a day trader, or even to be able to earn a living doing it. It takes ingenuity and a detailed plan of action. That's how much money you're going to risk per day, how many trades you're going to do a week, where are you going to get out of the trades, how many strategies are you going to use, are you going to focus on one? For me, I realized that one was all I needed, and actually made trading a lot less stressful for me, just to focus on one. And then that's how I got good at this one thing. But the number one key ingredient to become successful as a trader is having a specific system and strategy that can offer you reliable and consistent profits on a regular basis. Does that mean that every trade I take works? No. No, it doesn't. Some trades I take lose. That's part of trading. But that's why, again, you have to size yourself close to equal in every trade, so that if you have, 3 winners and 1 loser, you're still ahead. Otherwise, if you oversize yourself in the loser, you could be upside down. So all trades have to be similar monetary risk, not shares or contracts, because everything costs something different. Do you know what I mean? So trading success and financial success in the market is by pure design. What does it take? It takes having an itch. I truly, truly believe this more than anything else. And again, times like this, for this year, 2026, and even now, even this period that we're in right now, where everybody and their brother thinks that we're higher here, which I disagree, this really separates, the men from the boys. We say this is not the same thing as before, meaning 6 months ago in the market, you know what I mean, or a year ago. Things have changed, okay? If you want to trade like everyone else out there, then your results will be like everyone else. If you want to have outstanding results, which is something that I strive for on a regular basis in your trading, then you need to be different. You need to be very specific. You need to be strategic in what you're deciding to do. And you need to grab hold of what works and learn from someone, which is me if you come and learn from me. And I have a special talent for reading stocks and directional bias, and particularly the market. Now, it doesn't mean that I get the market right all the time. I do not. But I get it right a lot, and it's interesting because the market is hard to read sometimes. It's not easy. Even for people that have, been trading longer than I'm alive, even for people that are running hedge funds, they don't get it right all the time. They sometimes lose money. So again, learn a methodology and a system that is unique, and I have a unique method and strategy that I trade, which I alone created. And that's probably why I really, really, really have a lot of conviction in what I do. Again, today I didn't go long the market. I'm staying the course. And again, I said it when I was on Schwab. I just put it out there. It's out there. And I said I think the market's still lower. Again, if you want 100% guarantee, I can't guarantee you anything per se, except for the fact that the market will go lower. But I can't tell you when. I can't tell you it's going to drop and fall off a cliff at 4:02 tomorrow night. I don't know that, but things are setting up and the direction of that. And so that's something that you have to be aware of if you're someone that's carrying overnight trades or doing overnight trades. Now, you may not be doing overnight trades. Maybe you don't hold options overnight. Maybe you don't do swing trades. Maybe you're in your retirement account. You don't manage it yourself. You don't care. But I think that if you're trading, you should be looking at the market every day. I don't trade the market every day. Some days I do, but I always look at it. I always am looking at it, and it helps me make decisions what to do in other trades that I'm in, maybe holding it longer, maybe going hog wild and taking more trades, maybe carrying trades overnight, maybe waiting, maybe not killing something that's down because I think the market's going to go and help me, or whatever the case may be. Does that make sense? Other than the Middle East conflict, what's driving this market sideways and negative lately? Well, more so than anything, there's nothing driving the market up. So, I mean, why would we go higher when there's no reason to? Everyone keeps talking about the Mag 7 on TV. Well, they've taken a tumble. But right now, earnings season is over for the most part. We're at the tail end of earnings season. There's some things out, but they're not big names that would move the market. Earnings season doesn't start again until April. So say we have the whole month of March. We have the whole month of March to go. Every earnings is out. What's going to move the market? There's nothing that's going to move it higher. Again, I'm just using a scenario. Pretend or I said this in the room this morning actually. Pretend you are running a fund and you have $100 million. Actually, I was talking about this yesterday with my broker because we were both on the same page here about the market. Say you have $100 million, would you say, we're all in here. Let's buy, and all these high net worth clients, and you're managing their money. Would you tell them to go long here? I mean, I wouldn't. I don't think it's a good place to go long. Say we have a gap down, and we get up in the morning, and the market's at 560. Then maybe you could say, well, this is a good place to go buy. We can run back up to the highs at some point this year, or in the next 6 to 12 months, and that's about an 80-point move back up to the highs. But we're not that far off the highs. So I'm saying here, we're not that far off the highs where you're like, oh my God, this is a great place to buy. It's such a good deal. Let's buy. So again, you don't have a lot of institutional money coming in long here, but you have traders that are buying the market here. That's all they know how to do. And again, a lot of traders don't short anyways, and they're doubling down. So we get up in the morning, the market gaps down, it flips. People are upside down in trades and they buy more and they double down. That is going to come home to roost at some point. I mean, people are already losing money. in the last month, because like John said, it's been sideways and it's been in a very tight range, very, very tight range. I mean, technically you could scalp and go long and short the same day, the same stock. I don't trade like that. That's 0% conviction, and it's very, very risky. I mean, basically you'd have to take 10,000 shares of something, and if it moves 10 cents, you can make $1,000. Like, that's just crazy risky, because if it goes against you, you'll lose like, 8,000. So it's just not a market to be trading unless you have 100% conviction in what you're doing. So getting back to the whole idea of what's going to move the market higher, nothing right now. That's the truth. And there's more risks weighing on the market, which I said in the email this morning I sent out to everyone. I sent those talking points actually to Fox. We'll see if I can get on. Fox is very, very, very wanting to be bullish about everything right now. And I'm not being anti-America or anti-anything when I'm saying the market's going to fall. Don't get me wrong. I'm just saying that I'm just looking at the chart. I'm just reading what I see. And I'm not saying that that's negative. You know what I mean? That if we fall, I mean, it is what it is. It could be a buying opportunity if we fall. So you can't always look at it as something negative. But there's too many outer line risks weighing in the market right now to think that we're just going to shoot back up to the highs. And again, getting back to my example, if I was managing money for high net worth individuals right now, I would not be telling them to add to positions here in any stock or the market. So I'm not doing it myself. So, again, I'm not doing long-term trading, but I'm looking at institutional money, which is taking long-term positions. And that's part of the genius in my system as well. I'm actually making choices on a small time frame to take trades on a small time frame by looking at the bigger picture. So the Golden Gap rating system is how I figure it all out. It's 26-point check lessons, and this is what I teach in my class once a month, which goes through all the points. And then I add them up. And if it rates 20 points or more, then I'll take the gap in the direction of the gap. And so the market gap today was not a highly rated gap. It wasn't a surprise, though, that we rallied. Why? Because, again, people like to buy dips. We rallied into the close yesterday. And, again, things don't fall forever. So you're going to have green days in between the selling days. Nothing goes straight up and nothing goes straight down. So the rally today was really not that surprising. Anyways, I do think it is important, though, to focus on the right time of the day with money. And again, to me, that's the morning. The first half an hour of the day, the first hour of the day. But my niche really is looking for gaps and following the large institutional money. And again, I just used an example of what I'm thinking people are thinking and what I'm seeing in the chart of what big money or fund money is doing right now. And again, if that's the case, let's say I'm wrong, and funds are going to buy this market, we'll shoot back straight right up to the high and go over the high. I don't think that happens. We're still trading in a very tight range. I'm not saying it never happens. I'm not saying that's going to happen between now and Friday, though. And again, right now, that's all I care about. You know what I mean? Because I'm a momentum trader. I'm a short-term trader. And I actually think, as tight of a range we've been in right now, trading for short-term is a hell of a lot easier than trying to predict what's going to happen 6 months from now. I mean, again, I'm sure there's betting markets out there that are predicting the end of the war, because there's betting markets out there predicting everything right now, which is basically gambling. But I mean, if you said you thought the war is going to be over in 4 weeks or 5 weeks, and then if it dragged on to August, I mean, who's to say? So you don't know. Nobody really knows. And again, that's back to your opinion and guessing. And people can have opinions and they can guess, but if you're putting your money on a trade and you're putting your money on the line, I don't think guessing is enough. It's just not good enough. It's just not good enough for me. I mean, that's the whole point that I ended up developing 26 points. 26 points is a lot of things. And I feel that 20 is enough. So 20 is a cutoff. If I rate a gap, it totals 20 points or more, then I feel confident I can take it in the direction of the gap. If it doesn't, then I don't do it. And so that, for me, is what I do daily. And the purpose of it is to look at the points to determine what's happening with the institutions. So gaps are created with large institutional money, and that's what makes a gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only: large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and confirm that the large money will flow with it. By having a formula to rate and qualify the gap, you get confirmation and conviction. And again, that's very important in any market, but it's like do or die in this market, to be honest with you, that the large institutional money is on your side and then you play it. So gaps are an event. or an event. It's something big that happens, and it creates a sense of urgency. Thus, an action is being forced by participants of the stock. This is why gap trading is incredibly powerful. And basically, like I was saying, it's momentum trading. Trading golden gaps is a powerful and profitable way to trade because you're trading on the side of power money, which makes it a lot easier for you to make money because you are not going to move a stock. You're not going to move the market. You can't. It's only big money that does that. Any questions here so far? How are we doing? So getting back to this whole idea of using a system, you know, you need to have more winners and losers. It's tough to keep going when you don't. Again, that really can get in your head. And it's important to have some big winners. So again, did I know that the, you know, war would happen or whatever? No, Trump was talking about it. You didn't know when it was going to happen or whether something's going to happen or they're going to make a deal. I'm sure a lot of people thought something was going to happen at some point. But again, we've been shorting this market all the way back to early in the year. So it was a good call because a lot of people were going long. And again, we were just talking about this level of support here where people were going long here and we were shorting. We were shorting, and this was a beautiful sell-off. And again, this was a really nice call I made in the market. We got this, boom, fell into here. So again, what's a gap? Let's just go over it here. A gap is the difference between the close and the open. So you had, actually let's go back here. You have a gap here, this is the end of January, where the market closed at one price at 4 o'clock, and then it gapped down the next day at 9:30 and opened at a different price. So this is a bearish gap. So again, we shorted this. Now, if you want to look at a bullish gap, again, sometimes I go long. This was a rally, closed at 4, had a gain on the day, gapped up, and then opened at 9:30 higher. So technically, actually, if you bought calls here overnight, you got this move up. It was a little, boom, it was a little nice move up here, and you could have got in, and you could have got out, boom, could have been done. So again, one of the benefits of doing options is getting the move overnight, which you would have had here in calls, and you would have had here in shorts, actually, if you did puts. So a put is a short. So again, we're doing an option overnight. It's a fixed risk. If you risk $500, you can't lose more than $500. But anyways, this was a good call. And in fact, at the time that we did this, I thought we were going to go straight down, like basically where we were the other day. And then we wiggled and jiggled, and this has been the whole last 5-6 weeks, which has been very choppy for day traders. Even people that are going long. Again, they're going long, they're killing it, they're retaking it, they're doubling down, they're flip-flopping, okay? So it's really important to make good choices. How do you make good choices? Well, you have to have a set strategy that you believe in, and you can't veer off of it. Even if something happens news-wise and it makes you say, woo, if you're looking at the chart and you're basing the decision off the chart and the chart is telling you it's good, go with the chart. It's like earnings. Sometimes you get an earnings gap and you're like, oh my God, this is such a good gap, but the earnings might be fabulous and you want to short the stock. You got to go with the gap. You got to go with the chart. You can't get in your head and make a bad choice to do something against what you're seeing, which is reflected in the price action, because that's all that really matters. Okay? And how do you find quality trades? That's easy. There's a million stocks every day to look for to find gaps, a trillion. You could scan all morning if you want to. Again, I'm usually looking for one thing a day. And you need a proven system, which is create your own and then go through the process yourself, which is what I did, but it took me years of my life and it was very expensive, or you learn from someone like me. So anyways, my system tells me how, what, and when. How do you make money in the market? You trade a strategy system that's profitable. And for me, I coined my system the golden gap because I feel like it's like finding gold in the market to find a good trade, to find a good gap. They have momentum. And again, I specifically focus on shorting. So I'm looking for bearish gaps, okay? So we're looking for stocks that gap down, like I was showing you in the market. And what stocks would you be looking to trade? Stocks that gap and rate 20 points or more. The higher the rate of the gap, the better the gap, the bigger the move it should have. Although theoretically, if there's 5 that rate over 20, you could do all 5. And sometimes I do that with options. I'll put on multiple options trades because I'm not doing them as day trades. I'm doing them where I'm holding them for longer during the day or overnight. Okay? But if that's too much for you, then do one at a time. You trade the gap in the direction of the cap. I'm never going against it. Even if it rates stinky, I'm not flipping it. So if I rate a gap and it rates 12 points, I'm not then saying, oh, I'm going to go long it. No. I still respect the gap, and then I just don't short it. And when do you trade them? Early in the morning in the open, when they set up and trigger. And that's exactly what you do. In fact, I'll just show you here the SLV, even though this is a long. I'll just show you what we did today here. I think I actually had a high of the day exit in this here today. And I did not do an option in this today, just so you know. And any questions while I'm pulling this up? This is still higher. Again, Schwab wanted me to give long ideas. This is still higher. So this was the one today. We did have a high of the day exit in this. Look at that. Sometimes I do have a perfect exit. Stop close here, gapped up, rallied. We went long here, got in, got out. I was looking for 77, got in, got out. Boom, done. Call it a day. And that was my trade. So I risked 50 cents. I made about 42, 43 cents or whatever I made in it. That's what I do. And we actually did have a high of the day exit in it. But again, if I had bought calls in this, which I did not, maybe I will tomorrow. If I had, I would still be in the trade, just so you know. Like if I bought the 75 calls, because I'm holding to get bigger moves in options. But again, you see that trade that I just did? It was like, boom, done, go back to bed. And that's what I look for every day. But that was just an example of a long. Any questions about anything I just said? How are we doing? So again, following a system is how you make money. And I'm telling you, in times like this, it's very easy for people to get chopped up. You get sucked into thinking the market's higher, then it drops. You get sucked into thinking it's lower, then it flips and rallies, and you kill your trade. So then you're losing, or the little bit that you had gained doesn't cover your losses. Do you understand? And that's how people get chopped up. So it's very important to say, okay, I'm seeing this. This is exactly what I'm looking at. I'm going to stay the course here. I followed the rating. I'm just giving an example, whatever you're in, whatever you're trading. You know what I mean? So I thought I would show you, well, we'll just look at yesterday's gap. This was a couple days back. The 2nd. So remember Monday. Feels like a long time ago. Let's go to Friday. Friday we closed here. Then we gapped down Monday. Remember, this was the news, the war. Then we rallied. Then we closed here. Then we gapped down Tuesday. Yesterday was Tuesday. Fell. So we had a short in here. We shorted that. That tail is a sell-off, which we shorted. And we did day trade in that. Now, again, I'm day trading. When I say day trade, I'm taking trades on margin. You could have bought a put, and you could have bought a same-day expiration put. Now, if you do that, you must get out that day. Again, I'm not doing that. I do the Fridays, but you could have done that if you didn't want to take a trade like this on margin because it was expensive. So we're going to go over, actually this isn't BA, it's a Qs, but we're going to go over the trade from yesterday. In fact, let me just pull it up here. It's not BA though, it's the Qs. I'm going to go over every short we did yesterday because we had a good morning yesterday. So let's go over the gap. Closed here, again, I'm going back 2 days, 608.09, and we opened in the morning at 596.33. You see it? So we made money shorting yesterday, even though we had a green body. Look at that. Gotta go back. It was 3.3. Okay, everybody see this is a 1 minute. Oh, let me go back. Actually, I'll pull this up here. We entered at 597. Again, you could have bought a put if you wanted to, like at the strike. Again, this is a margin trade. You have to have a margin account to do it. 2,000 shares we added. Sometimes I will do this. You don't have to do it if you don't want to, but I will. When I really like something and I know it's going to go or it has a big target, added at 597.10, pulled my price up. Then I added again at 596.30. This pulled my price down, but it was still a good price. And so then the average price was 596.67, and then got out at 592.30 and made $34,960 on this trade. So here was the trade. Again, this is yesterday. So we closed here, gap down, boom, got right in, hit it, got the drop, rallied, again, added, got the drop, added, and then boom, there's the sell-off. So again, this whole shebang, you know, I mean, if you got it at the top, we didn't get it at the top at $5.99, was a $7 plus move. So that's pretty much what I'm looking for every single day, something like that. Again, that just happened to be a very large move, and then I did the ads in it, so it was a very big profit, but you could have bought a put in it. Then I did Google, which I got stopped. Here's this trade. So I did a bunch of trades yesterday because I really liked the gap. We closed here, gap down. This was yesterday, and I stopped in it. Here, I'm going to bring up the Google. Again, this is on the 1 minute, 3-3. Any questions while I'm pulling these up? So yesterday was a busy day, but I just want to show you a good day. And a day we did have a loser. Yep, so I did this here, got the drop, got stopped. You can see right in here where I got stopped. Again, I'm shorting. I'm shorting. Again, shorted it, 298.50, put the stop, 360, boom. Took the risk, 52.50, and I got stopped. So I lost in that. Then we did the Amazon. Let's go to Amazon. Just showing you the big slide here. 3-3. Any questions? I'm sorry, this is taking forever to load here for some reason. Here was the Amazon. Again, closed your gap down, 3-3. Did the trade, dropped, added, got the drop. So we shorted this and made money, and it worked. Entry was 203.40. I did an added this. When it pushed back, you saw it right there, 203.80. So my price was good, pretty good, 203.60. I got $1 out of it. It was a nice trade. This was all 3-3. And then here is the BA. We did the BA too. I did the BA late. Wish I'd done the BA early. Entered at 223. I didn't do any ads in this. I could have. 221.25. I got out. 61.25. Again, here's the BA. This was all yesterday. Good gaps. I saw they were going to fall. Read the market direction right. Right there. Well, I didn't do this early. I wished I had. Wished I had done this out of the gate. Here it was, got the drop, boom. So we grabbed them, and we were in puts going into yesterday. So you could have got out of a bunch of things yesterday into this drop sell-off. So, 3 winners and 1 loser. Just yesterday alone, again, my risk is an average of $5,000 a trade, which is a lot. You could risk half. You could risk 1/4 of that. So $41,835. You must have a margin account to do these trades. If you don't, then you're buying a put. And again, if you're doing something like BA, obviously this does not have a daily expiration. So the market has a daily expiration. You just do the closest one you can. So we shorted. Again, today we went long, but we shorted yesterday. Any questions about that? And I see some people that signed in late. We already started. So there's a lot of money to be made in the market, whether it's 1 day or 1 week or 1 month, if you know how to trade. I mean, it's literally like trying to find a needle in a haystack, though, because not everything works. You can't short every gap down. You can't go long every gap down. You can't buy every gap up. You can't short every gap up. You can't go with the market every day. The market some days doesn't make any sense. Gaps up, falls, gaps down, flips. I mean, And that's like trying to predict again what's going to happen with the war. So for the most part, you're better off finding something where you don't need the market. Now, if I see the market has a good gap though, and it's going to have a directional bias that will go the entire day, I will try to find something with that or hold something longer with that, if that makes sense. Do you know what I mean? So like I said, I still think it's important to look at what the market's doing every day. So how much do you need? Well, you need to have money to have a margin account. If you don't, you can go prop. Or you can open up an options account, which you can open up an options account with a minimum of $2,000. For a margin account for a retail place, if you want to be in and out of all the trades you want, you got to have $25,000. Or you go prop, or you do options. So what stock prices do we trade? We're not doing any penny stocks or low float stocks or cheapy things. We're doing all companies or stocks that you would know or you've heard of. Could be anywhere from $10 all the way up to the market. The market's probably the most expensive thing we're doing, really. And we don't do the market every day. But yeah, we have done some expensive things. Microsoft is expensive. We've day traded that. So again, if you have 100,000 in buying power, if you say, okay, well, I can only take this many shares of Microsoft, then fine, then that's what it is. Or you can do an option, okay? So, again, the SPY, the Qs, all the ones that we were looking at yesterday, you could have done daily options, expirations, and bought puts, okay? Do you need to risk an advanced amount like me? No. I didn't start out risking this much money. When I started trading, when I was developing my system, I was risking $150 a trade. If I made money, I could make $300, $400, $500, and if I lost, I only lost $150. It took me a number of years until I felt comfortable even getting to the point of risking $1,000. I mean, I didn't go from 150 to 5,000. It's a process. I went from 150 to 250 to 300 to 500 to 750 for a while, 1,000. It's a step. So even if you say, okay, I'm brand new, I have no idea what I'm doing. Let me just risk $200 a trade right now until I figure this thing out. Fine. It doesn't mean you're risking that the whole year. Get comfortable with what you're doing. You can always risk more once you understand what to do. It's not like, oh my God, you're only going to be able to make, $1,000 the first week because you're only risking $200 a trade or something. No. It's just until you get used to doing it or until you grow your account. Do you follow me? Any questions about that? But again, why short? Because of the panic. And again, we're just talking about the market. If you think there's no panic going on out there, please. There is panic everywhere. In fact, the other day I went outside and there was bomb sniffing dogs walking around in the street with cops. Again, I waved to the NYPD and I thought, woo. And there's been NYPD helicopters flying around the park since Monday. It has been all hands on deck here in New York City. We are on high alert here with the NYPD. I mean, a lot of people out. More than I've seen, big guns with the Uzis and everything since Monday. So to say that people aren't panicking right now, or people aren't overly concerned, no, people are concerned. So again, the time and opportunity for the panic could be news events, could be something to do with a specific company or a CEO. So there's all kinds of reasons that the panic can come into a stock or the market. All kinds of reasons. But it happens all the time. Okay? People are overly cautious and hence panic leaning. Probably. Again, a lot of people are trying to put an optimistic spin on it. I think people on TV and people you talk to, they're trying to put an optimistic spin on it. That's fine. But again, if it was your money, which it is, or if it was your mom and dad, you're managing your parents' retirement account, you don't want to lose your mom and dad's money. You're going to be conservative. You're going to be cautious. Do you know what I mean? Like I said, if I was managing $100 million, I would not buy the market here. There's no way. So it's like, okay, again, they call it smart money for a reason. What is smart money doing right now? Do you know what I'm saying? Like, smart money does not think the market's going to, go back up over the highs like a rocket right now. They're optimistic, keep eyeballs on the screens. It's half a dozen, one or the other. Like the Nancy Guthrie thing, what happened to that? No one's even talking about her now. God, they haven't found the lady. It was 24/7. They wanted to get people to watch TV for the panic for Nancy Guthrie. So on television, it's whatever gets the eyeballs on TV. That's true, but that was all about the panic with the woman and the finding the person, and now all of a sudden it's just zero coverage. I don't even know what's happening with it. I know they haven't found the lady. It's terrible. So again, it's whatever makes people watch TV, and you can get caught up in that. At the same time, you do still have to kind of know what's going on. You know what I mean? You're like, okay, I got to watch the news because I got to know what's going on because I'm in trades tonight. But if you go crazy or make decisions based on news, it's going to come back to bite you in the butt. It's not clear, how do I know when to get in and out? Well, that's what I teach in the class, Paul. The class day 1 is the rating system. That's the whole day 1 and Saturday, where I go through all the points. Day 2 is all the entries and the exits. That's the Sunday of the class, and I teach that in the class. So again, if you decide to join, which I'll talk about at the end, the special I'm doing this week, and trade before I do the class, which is not until the end of March, you would just get out in the room where I get out, and that's it. That's where you just follow me until you do the class. But in the class, you learn it. That's part of the class. So why is a Golden Gap 26-point rating system consistent and reliable? Again, power money. Power money in the market is created by institutions who set the tone for a stock's move on the day. If you become a specialist in defining what institutions are buying or selling, then you will have a huge advantage in your trading. Power money sets the trend, makes the trend, and changes the trend in charts. Now, when does it become sticky? When you're in a situation, which we're basically in right now, not basically, we are in right now, where the market's in an uptrend, but it's not moving higher. So that you say, well, wait a minute. Again, are we in a transitionary period? I don't know. But again, we are in an uptrend. There's no denying it. But that's when it starts to get tricky. And again, we've been in crunch time for the last 2-3 weeks in a very tight range, faking up, and then almost faking down, like we're gonna tank, and then fall and kind of tank, like a baby tank, but not really tank. Not what I think is tanking. If you're not trading on the side of power money in the market, you will have a hard time seeing lasting and consistent success in your trading. You have to learn how to read and trade on the side of institutional money. And again, I prefer to short, but I will go long. Institutional money is in charge of the market and stocks at all times. Big money, power money can short and go long. So again, you have to know how to do both. And I think far too many people, like I'm saying, don't focus enough on shorting. And then when the market turns or the market sells off or something happens, then they just want to keep buying. And then they get hurt. Or they double down, So again, looking at the BA, just clipping back here at the beginning of the year, institutional money, power money. If you looked at BA, would you be like, oh, this looks like a fabulous long. Institutional money is not buying BA right now. Again, the whys and wheres and whatever, who cares? You can read about it, investigate it, and come to your own conclusion. But institutional money is not buying Boeing right now. So that's what we know. So whether you want to short it or not is up to you. But you're not going to go long it, or you shouldn't. Okay? Any questions so far? So anyway, so making in this business as a day trader, you just can't lose a lot. That's why you have to set your risk. That's why you have to put stops in trades. You can't let them completely go against you without any stop at all. And you have to win more than you lose. It's the only way to consistently make profits. And sometimes you got to get some big winners. That way it covers the losers. You know what I mean? And again, you just have to win more than you lose. You have to be right quite a lot. And that's why I developed the 26-point rating system. I feel like if I follow that system, I'm going to have more winners and losers over the course of a year. And then I just follow it. And even if the news or the earnings seem to be against whatever the gap's saying, I go with it. Do you know what I mean? So I follow the checklist, do or die, because that's going to tell me what's really happening in the price. That's going to tell me if institutions are dumping at something, shorting something, buying something, and then it takes the guesswork out of it. And it actually helps you trade less stress, because you say, okay, this rated 22 points, it should work. It should work. In fact, there was one that I did. Every day it runs together now. I don't even remember when this. Here. This is a great example. I bought puts in Google, 2.5. It was a good gap. It was short. It flipped against me, but I was in the trade. I was down in the trade when I went to bed, and the trade ended up working in the time that I had the option. That's a really good example. Where if you took the trade and you killed it, you would have lost, and then it went on to work. Now, if you want to kill trades in the middle of a trade, I'm talking about options, you need to be doing that with every trade at a certain percentage to be consistent. Again, I don't do that. But I guarantee you there were people on my newsletter that killed that trade and then didn't make any money in this, and I did. And they took a loss. So this is a really good example. Again, you believe in the rating, you stay the course with the rating. So the 26-point rating system measures gaps by rating them on the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, or a big move in the morning. You know, that's what I'm looking for. And again, I'm saying $1 or more, but if it's expensive, we could be looking for a bigger move. Like the Qs are expensive now. So a $3 to $5 move is what I consider a good move in the market now, depending on the stock. Early confirmation of the bias and the move between 9:30 and 10, and then precise entries with follow through and a good risk to reward target potential. And again, I go through all this in the class, but we're focused on the morning trading. I really find that is the time of the day that really gives me the most bang for my buck. You know what I mean? Where if I take the risk, I'm going to get the 1-to-1 or more in the trade. Any questions about that, or margin accounts, or anything at all? How are we doing? Richard, I see you here. Do you have any questions? Jesse, I see you. I don't know if you have any questions. Ken? Rick's good. Okay, so making money trading is about consistent and correct trade selection. It's so critical. Making money trading is about correct trade selection. It's about getting the directional bias right consistently to know what direction to take the trade. Again, it sounds simplistic, but if you're in the wrong direction, you're going to lose. Trading successfully means focusing on taking trades with institutions, and being on the side of institutions increases your odds. It just does. It increases your odds to what? To make profits. Because institutions make stock trends in the market. Fact. Institutions move stocks either up or down. If you want to get paid, the key is to be in the trade with the large directional moves. And you say, well, how can you get a big move then if it's only retail traders? Listen, there's a lot of people that are retail traders. Millions and millions and millions of people are retail traders. And there's also small funds. So again, there's all kinds of people doing all kinds of different things all the time. Don't forget that. And yeah, there's a lot of people that are retail traders. If you're trading with institutions, not only are you on the side of momentum, you're also trading with professional traders. As an individual trader, you'll be more successful if you trade like a professional, even if you just work for yourself. And even if your size is small, it doesn't matter. It doesn't matter if you take one contract or 100 contracts. You're still never going to be able to move a stock. And so everything I trade, I get filled, I get in, I get out. If I put a stop in, I'm going to get hit out. You know, we're trading stocks that are very liquid, and we're trading options that are very liquid. Okay? And they move, which I want them to move. So I'm trading things that move a lot, that move big. The rating system looks at 26 points on the daily chart of a stock. The rating system is a checklist. And again, everyone that takes the class, everyone in the room has to take the class, or is going to take the class in March. And the idea is to go through the checklist before you take the trade. I know not everybody in the room does. They rely on me, which is fine, but you should know what you're doing, and you should really be doing it yourself, because that you're risking your own money. There's no getting away from that. And you'll have more confidence. And again, the Google trade is a good example. You say, wait a minute, this is a good gap. I'm not going to kill this even though I'm down here the first day. It's a good gap, you say to yourself, and then you hold it. The checklist tells you what to look for in the price of the stock to read direction correctly. And I'm telling you, in times that are tough, you need to know what you're doing, because this is a make it or break you. People blow up their accounts in periods like this, that they don't have any money to even keep trading. And how do they do it? Doing crazy trades, scalping, flipping direction the same day, killing trades, taking too much, doubling down. Can I go over what your class structure is? When is the start and how long? The class is 9 a.m. Eastern Time to 5 p.m. Eastern Time, Saturday and Sunday, March 28th and 29th. A 1 hour break for lunch, somewhere between, 12 and 1 Eastern. And we usually have a 10-minute break in the morning for bathroom and coffee or something, and a 10-minute afternoon break. And sometimes the class goes after 5 o'clock. We have a lot of questions. I don't just stop. I go through the class and take my time and answer questions for everybody that has questions. There's no rush. And then Sunday, the same thing. In the morning on the Saturday, we go through just some very basic things where I talk about candlesticks and my charts, and then we get right into points, and that's the whole day. The whole day is going through charts and the points. And then we do a practice gap where I don't show you what happens, and you go through it and make sure you understand what you're looking at. And then we sometimes do that in the room. In fact, I think we should do that in the room actually for the market this week. And then Sunday, we talk about options a little bit in the morning, money management, risk, and then Sunday, the rest of the day, is all the entries, targets, and the exits. It's a lot. It's a lot. So you gotta take notes, be there live, ask questions, participate. And again, we go to whenever we're done. But the live room, you can ask me questions every day. You have questions during the day, you can always ask me questions there during the day, or email me or call me after the class as well. No, you got to be there and take notes. You got to be there live. And you want to. You want to. That was a good question. Okay. So the points tell you where the money is flowing. Why does this matter? So you know what direction to take the position to profit. Now again, I'm not saying you couldn't have gone long the market as a day trade today. I didn't do that. I'm not saying you couldn't have. Obviously, if you did, you made money. Could have got in and got out into the close. I didn't do that because I didn't have 100% conviction we'd move higher, and I also didn't like today's gap up. But like I said earlier, I'm not surprised because we bounced here that we did rally up. I'm not surprised that we did this. But technically, you could have gone long today and got in, got out. So what do you need to do to make trading work? What do you need to do? Again, you have to have a plan of action. If you are organized, I like to write stuff down. I have a lot of notebooks and stickies, and I make lists of things. Like, I have a list of things I got to get done this weekend, a list of things I got to get done tomorrow. I'm a very organized person like that. That helps with your trading. Trading on the fly is bad. Doubling down is bad. Just going with whatever someone's saying in the news, bad. So, again, you have to be very organized and take it seriously, like you work for a company or you work for someone else that you're accountable to. But the reality is you're accountable to yourself. But it is kind of funny. Like, people will be more accountable to their boss or a stranger or somebody than themselves. No, you should be accountable to yourself for your own actions and your risk and what you're doing. You know what I'm saying? Like, that's, you have to take it that seriously. So again, what do you need to be successful? Number one is strategy. For me, it's golden gaps. Again, BA was a good gap yesterday. This closed here the day before, open here, fell, dropped. So again, we shorted the BA yesterday in here. So what do you need to be successful? You need a good strategy. Number two, you need a system to follow with rules for the picks. My rules are the points. I only trade gaps that meet the criteria of 20 points or more. I don't fudge it. I don't trade on the fly if I didn't rate it. If there are no good gaps, then I don't trade at all. I take the gap in the direction of the gap. I never flip it. I never go long a gap down or short a gap up. If it meets the criteria in that direction, then I do it. And I don't deviate from it. Okay? You follow the rules. And these are rules that I set for myself, and you'll learn from me. And if you want to trade with me and do as well as I'm doing, then you got to follow the rules. Again, if you can't follow your own rules, then there's anarchy. You know what I'm saying? That's why they have traffic stops. You know. You follow the rules. Not all gaps are good. You can't short every gap down or go long every gap up. They got to meet the criteria. And then number three, you need a method and structure to enter and exit the picks. So we talked about the market. This was the market on 330 that had a nice drop. Closed here, gap down, rallied, boom. Shorted it, added, got the drop, out. Again, you're up a lot of money, out. First hour in the day it's falling every second, out. So again, you can't ignore your profit either. It's the same thing with options. Like, you can't look at your P&L and say, oh, I'm up 352%, but it could go to the piggy target. No, you're up 352%. You know, again, this isn't long-term investing. You're trading the momentum, get out. You get the momentum, get out. You take the trade, you get it, you get out. Do you know what I'm saying? Like, this isn't like I'm going to buy and hold this forever and ever and ever and ever and ever. That is not going to work. You're never going to make money trading that way. Now, again, if you want to invest long term, if it's your IRA, if you have as much money as Warren Buffett, fine. Even hedge funds that we're talking about and big institutional traders have parameters. They can get margin calls too. You know, so again, everyone has to follow some type of structure to get in and get out. You have to know what your targets are. Number one is you need a strategy. You need a strategy to do well. And you got to have rules. Again, I have the rules. And then you have to structure to enter them. Okay? And like we were talking about, time of the day is a big, big factor, a big, big deal. Because there's just certain times of the day that things seem to be wiggly and jiggly and don't really go anywhere. One of those times is lunch. Yeah, big traders, people running trading desks, they go to lunch. So things kind of just go like weird at lunch. Like, I'm never entering a new trade at lunch. Do you know what I mean? That would be like ridiculous to do. Number four, you need monetary goals. Per day, per week, per trade, per month, per year. Again, that way it kind of keeps you on track. Goals should be based on a risk unit, which should be based on account size and monetary weekly, monthly goals. Goals should be 3 risk units on average. Again, could be 5, could be more if we have a good week. So again, like I showed you yesterday, we had 1 loser and we had 3 winners. So on a calendar week, Monday through Friday, I mean, it's not like there's not weeks where I will make money just 1, 2, 3, 4, 5 with no losers. There's weeks I've had weeks like that, even this year. But in general, you're on a 5-day week, you are going to have some trades that lose, okay? And that's why it's good to have some trades that go 2 to 3%, 100%. So where if you do one trade and you risk 500 and you lose, and the next trade you make 500, and the next trade you make double, where you make 1,000. So then you also covered the one loser, and you're still up 1,000 with 3 trades. You follow me? And so again, we don't know. We don't know. You don't know when you're going to get the big ones. You don't know when you're going to get the good ones. Richard, are you here? Richard's asking me, when do you get the big ones? You don't know. Again, it's been an exceptionally good time to trade this year in 2026. So people that did the class in December, January, and February have benefited greatly by starting at an extremely good time where we've had a lot of large winners. But some of the trades, again, weren't easy to do. I showed you that Google. Here's another one. Let's just talk about this here. Again, we shorted. We did puts here. They reversed. Then they flipped here and reversed very quickly. While theoretically you could have got out of some things here, you couldn't have got out of everything here because it snapped back pretty quick here. And then guess what? And then things went here and dropped. So again, you had to be patient. You had to stay the course. You had to be patient. So again, this is where you need to be patient to let trades play out and stay within your risk amount. So you can. Because if you had too much money on a risk, then you might have killed a trade that went on to work. Again, no one said that it's every single day or every single week is easy. Even the weeks sometimes that I make money, I'm like, boy, I really worked hard for that week. Because it could be tricky. And again, I think right now it actually is tricky. I'm not going to deny that this has been all easy peasy the last 2 weeks. I think it's been tricky. I think the beginning of the year was easy, January and February, but I think the last 2 weeks have been very tricky. Again, I just showed you an example of a trade that was down until it went. That was just, this is what it's been. But if I had killed the trade, it would have lost, and then I would have been right. So I hate that. If I take a trade and I lose, and I followed the rules, and I followed my system, I understand that's part of it. But I never take a trade, kill it, lose, and then it goes on to work. Because when I used to do that, when I started, I used to hate myself and be so mad at myself when I would do that. And then I'd always say, I knew it. I knew that was going to fall. I knew that was going to go. I knew it was going to work. And over a series of, 2-3 years, then you get out of that. And then now here I am, and I just never look back. But if you're new, you have to really be very disciplined with following the system so that you can do well. But that's, again, what separates the men from the boys when you want to make a lot of money. You have to be willing to take the risk. And nothing goes straight down and nothing goes straight up every day. So again, it's about the reliability in the system. It means sticking with one thing daily, if you can find it. Some days you will not do any trades if nothing meets your criteria, and this is better than losing. You have to know when to step back, keep the losses low and wins high. And again, that's what helps you get to the money you desire. Staying with the system, staying the course, following your risk, booking money, booking the profits. Okay? But again, the morning is just it for me. It's the fast trades, it's the 30 minutes of the day, this time of the day, and do the open is very important. And you'll learn more about that in the class too. Again, if you come and trade with me and want to take the class, you're going to become a gap trader. You're basically going to become a momentum trader. And again, what is momentum? Again, this is the gap. You're just seeing it here in the 1 minute. But what is momentum? It's a big move. In this case here, it's a sell-off to the downside. Again, this is $7 plus. That's a big move for anything, let alone the market. Okay? So what helps with successful profits in the system? Again, money management. Sometimes you look at the money and you might not think it's enough, but it hit the target. Well, then you got to get out. You got to get out. Sometimes you look at the money and you say, oh my God, this is so huge, and it didn't even get to the target, and you get out because it's just too much money to not get out. Do you know what I mean? Don't forget the objective is to make money. It's not to get out of a short at the low of the day in every short and a long at the high of the day and a long every time. I'm very good with exits, and you will learn that from me in the class. And sometimes I do get the most perfect entry I could have. I think today my exit was 4 cents off the high of that SLV. I had a perfect exit today in that. It never hit that number where we got out of that today the rest of the day. and I'm been trading for a long time, so I am good at reading it. So you just follow me in the room till you learn it. But again, it's not always about an exact number. It's sometimes an area. Do you know what I'm saying? But I said 77 for SLV today. When it bumped up over it, boom, out, done. What if it had gone up to 78? Well, I could have made another $1, but at least I didn't lose, and it was up a good amount of money, and it was almost 100%, and I felt like that was fine, and it was done in 5 minutes. And it's not about trading all day either. So don't be afraid also to take a stop. It's a limit order stop. You put the stop in. And again, we're trading very liquid stocks. You will get filled in your stops. So you have to be very deliberate in your trade choices. Again, a lot of people have a list and they're just back and forth with a million different things and just looking to buy dips or trend trading, and they get caught in things against the market. You've got to get conviction. It takes time to do that. I think if you start to trade with me and you start to make money, then you'll gain the conviction, then you learn and you ask questions, you go back, and it's a process. It's just a process to do it. I mean, it should be a fun process. Getting an education and learning something new should be exciting and fun. It shouldn't be something that drags you down and you're like, oh God, I have to learn something new. No, it should be something fun. You know what I mean? Maybe not as fun as going on a vacation, but making money is fun. And when you're in a trade and you predict it's going to go in a certain direction, and you take it, and you're down, and then you get up the next day and you're up a lot of money, and you realize that, oh my God, I was right. The gap was good. That is exciting. And that should motivate you to learn more, to focus more, and to get more into it. You know what I mean? And that's my hope for everybody that comes to me and wants to learn. But not everybody is excited about learning. I get it. But you're going to do better if you understand what to do. I mean, I just showed you 2 examples of the Google and the market, that trades that worked, that were down before they went. Any questions? How are we doing? So, learn a system that has an edge. I feel that my edge is gaps, trading on the 1-minute chart, looking at directional bias, shorting, all of these things. Great webinar, thank you. Anyways, we're just talking about one option. Again, if you decide you want to do options only and you don't want to do the J trades, that's fine. But I do options, which I have as a subscription, as a newsletter, which I'm not doing as day trades. I'm doing as longer term trades. And when I say longer term, I mean the weeklies. I'm not meaning like leaps or anything. But this is longer time than 5 minutes for a day trade, just so you know. But you could theoretically do them as day trades if you want. Anyways, this is what the newsletter looks like. Symbol. Okay, I put it there. Strike. Again, usually I'm doing it at the money, or if I do it away from the money, that's the first target. Expiration date, the type is a call or a put. And again, this was a trade I sent. I sent it after the open. But I sent a lot of trades out in the pre-market. But sometimes I send them later in the morning. So this was the Google. What was the day? 210. I have to go back here. 210. Close here, gap down, take it over. So this was above the strike here. And then I called the 315s, which it dropped. And again, fell. This was a nice trade. So this was $5.50 a contract, which wasn't insane. It was kind of pricey, but we did it out a week. Sold at 17, 209%. Good trade. Again, what if you did a smaller size? What if you risk 1100, sold at 17? Could have made 2300. Again, you want momentum when you're doing options. Just go back. While theoretically you could have got in and out the same day, I did not do that. But you could have, and it was profitable. So I'm waiting for a big fat red or a series of reds. That's usually what I do. But you could have got out the same day. If you're not comfortable holding overnight, you could have got out the same day. But again, if you get out the same day and it's down, then you're taking a loss. But this one was positive on the day that I called it. Anyways, create a plan of action to achieve your financial goals of earning a living if this is what you want to do. And I think you need to start small and learn it and then build it up. And again, could be a week, could be a month, could be 4 weeks, could be whenever. It's like if you ever had a sports injury. I don't know if you've ever had a sports injury or a muscular injury or something where you're like, you're doing the PT and you're doing everything they say, and you're taking Advil, and you're like, when am I going to feel right? When am I going to get better? Like, when is this going to be over? When do I have to stop doing the PT? Again, nobody knows. You have to do the things you have to do, and know that if you do the things that you're supposed to do and get up in the morning and rate the gaps and size yourself right and get out of trades with profit, you will get there. Just know and believe that you will. Again, no one knows necessarily the timing of everything or how long it's going to take. Yes, Rick, I do. And I'm in stuff right now, which flipped. Rick's bringing up about the options. And do I do all the trades? Yes. Now, has it been a very busy time of the year? Yes. It has been busy since January 1st. Are we going to be this busy all year? I don't know. Probably not. But I feel like there's a lot of opportunity. So, like, again, Rick is asking if I do all the trades I call, and I said yes. So, if Rick's on the letter... So I called trades yesterday, and I stayed the course. Again, you were in the room today, Rick, but I'm upside down in some puts today, and I didn't kill him, if that's what you're asking me. So we'll see. We'll see if I'm right. So again, in order to do well, you have to be willing to take the risk. You have to be consistent with your risk. And you have to stay the course. Now, if you don't want to do that, though, you could kill the trades when they go against you like 50%. I'm telling you I don't do that, though. If I end up losing in trades, I'm in market trades that are out till next Friday, for example, which is a long, long time. But if the market continues and rallies and goes back up to the high, then I could lose on those trades. I don't think it's going to happen, though. I think I'm going to end up being okay. Just like last week. Remember this, Rick? We flipped. We flipped. We fell. So, again, this is a classic mistake that people make. But if you want to kill trades when they go against you at 50%, you would have killed the trades yesterday. And if you did that, you could re-enter the trades. If we fall, again, I'm not doing any of that. I would do a new trade if I wanted to, or just stay with the current trade. But again, you could take a loss then in a trade that goes on to work. So again, in the trades I lose in, if this, for example, loses the QQQ puts I'm in until next Friday, if they lose, I'll lose everything I have in it if it doesn't fall. And if you kill it at 50%, you would have saved 50%. But if I'm right, Rick, and you get up one morning and I get up one morning and the market said, I'm just making this up, I'm not predicting this happens in the next 7 days, but I'm just making this up. If the market's up 570, then I'm going to be up a crap ton of money. And then you would have taken a trade and killed it at 50% and had the loss. And I can't say for sure without going through the process if at 570 we would lift or fall. So it has been a busy time. And I don't know if they'll continue all year. Probably not. There's definitely times it's busier than others. Like, you know, Memorial Day, July 4th. We're not going to be busy trading around those holidays. But right now, look at the year we've had so far. Look at all these swings. And yes, we've been in a tight range for a couple of weeks. It's not going to keep going like that for months and months and months. I can tell you that. You know, whether we get out of it in the next 5 days or, you know, we're not going to be in a tight range till August. Do you know what I'm saying? That was a good question. Any other questions? Okay, so the class I teach, if you want to learn my method, is called the Golden Gap Course. The Golden Gap Course teaches one solid strategy to trade gaps effectively by reading the sided power and charts. The course teaches how to read support and resistance, take positions in the right direction. The course teaches a more proficient and advanced way to read charts, focusing on technical analysis and gaps. And again, whether you want to do the day trades or options or both is up to you. I like doing both. Sometimes it's a lot for me to do both when I'm trying to look at everything in the morning, but I find that it's beneficial because I feel like I have more time in my options. and then I can get to bigger targets. And then when I do the quick day trades, I have that money right away. And then I'm flat by 4. So I just like to do both. But if you only like to do one or the other, that's fine. The course teaches you how to get conviction in your trading and the market as a source of wealth by trading with the side of power for consistent profit. So again, you need a plan of action. You have to start somewhere. You have to make $1,000 a month before you can make $2,000 a month. You have to make $3,000 a month before you can make $6,000 a month. You have to make $6,000 a month before you can make $10,000, and so on and so forth. So again, start with the amount of money you have and go from there. And that's what you need to do. And you can ask my opinion if you're like, I don't know how much I should be risking or not. Richard Y., I see you here. I don't know if you want to ask me any questions. Again, it depends how much money you have in your account. I mean, you can ask me what I think of what you should be risking, you know, and I can give you my opinion, but ultimately it's up to you. But you have to be consistently profitable as a trader if you want to make it. If you're not consistently profitable, then you do not have the right plan of action in place, and you need a plan of action, a reliable system. So again, that's why I tell people you get the move to get out. So say I'm in 10 options or whatever, I'm just making up a number here, and I'm down in 10 trades, and I get up the next morning, and again, if you don't want to do all the trades, you don't have to, but say I get up the next morning, 5 are up, profitable. I'll get out of 5, and then I hold 5. Again, don't hold everything, don't get out of everything. It's called momentum trading. You chunk it out, chunk it out. Does this make sense? You take the trade, get the move, get out. Some you gotta hold, some you gotta wait, some are going. That's trading. Does that make sense? So you cannot lose a lot if you want to make a living trading. And that means 2 things: getting it right many times in a row. You got to get it right a lot, and not losing too much if the one trade doesn't work out. Stops help reinforce this disciplined behavior, and you learn in the Golden Gap course where to put the stop. And it really is about the quality, not the quantity. And some days you may have to take a day off. Some days there's just nothing to do that's good. Like, I think we're going to get trades Thursday and Friday, but maybe Monday we don't have anything. You never know. Of course, the Mondays have been busy lately with all the news over the weekend. But again, focus on quality. This was a nice trade yesterday, this Boeing. This closed her gap down. I wished I had gotten in that day trade earlier. There was just so much to look at. So put a plan of action in place. Number 1, trade only golden gaps at rate according to the 26-point rating system so that you have a high rate of success in your directional bias. You want to have more winners than losers. Number 2, get the best entry you can with precision early in the morning to get the good risk reward trades. You're looking for 1 turnover minimum, like we did today in the SLV. Create a money management plan for yourself so you can achieve your goal of whatever amount of money you want to make. Whatever it is. And everybody has a different amount of money in their mind that they want to earn. And then I suggest be in the live training room to get my calls, even if you're doing only options. I think being in the room is critical to hear what I have to say about the market, the targets, the stocks we're doing. Okay. So the class I teach is called the Golden Gap course. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. The course teaches what direction to play the stock. It also teaches you how to play the stock on the live day and take the entries and exits. The class teaches you how to read institutional positioning in stocks. And the Golden Gap course teaches you how to day trade gaps. And I think that even if you want to do longer term trades, swing trades, or long-term investments, reading things in a minutia time frame really does sharpen your technical analysis skills. You learn how to read the 1-minute chart as well as I do. It sharpens your skills to read higher time frames. So again, I have a fast brain and a fast mind, and I talk fast too, and I call the trades fast in the room, which is why you gotta learn how to do it. But again, it sharpens your skill set then to read things on bigger time frames once you really understand what's happening there. I mean, you're just going to get better as a trader. And like we were talking about earlier, learning really helps you. It's over time. Like my father's a good golfer. If he has a summer where he doesn't golf a lot, he doesn't do as well. His summer he golfs more, he does very well. He's been golfing for a long time. He's a good golfer. It's just like playing a sport or anything with trading. The more you do it, the better you get. It's a downfall of many, many, many traders that they do not stick with one thing. They'll do something for a month, then they'll quit, then they'll do something else, and they'll try something else, and they'll try this, and they'll do this, and they'll do that. They never get good at anything. And maybe some of the things they were looking at doing actually worked, but they quit them too quick. It's a downfall of people that they won't stick with something. I don't know why. I just don't know. People tend to be impatient, I guess. But it's the reliability in the system, or the 26-point rating system, that helps you stay active, focus, get the right pick. And again, if you're in the room in the morning, I'm telling you what I like. Okay? So give yourself a chance to earn the income you desire in 2026. It's so early in the year. So early in the year, you have plenty of time to learn and trade and do everything. And again, we're at a busy time. We are busy. I'm a little bit exhausted, actually, from how busy I've been. I've kind of not gotten some regular things done in my life. You'll laugh, but I still have my Christmas tree up. I'm not even kidding. Like, I've been trading like a banshee, and and then the weekends come around, I've been tired. I mean, I have other things in my life that I need to get done in the spring. But when the opportunity's there, you sort of like have to strike. Do you know what I mean? And like, I feel like this year has presented a lot of opportunity to make money. I can't always space it out. You know what I mean? It's just like, it is what it is, and you have to take advantage of it. So work smarter, not harder. Think about that. Any questions here? My screen is so small, it's hard to see the charts. That is a setting or something that my support guy can help you with, Paul. I know that, I don't know what kind of computer you have, but that's not normal for everybody in the room. So I have a support guy that can help you with that. I can't tell you how to fix that, though, because I have a computer guy that helps people get set up in the room. But you should be able to see my chart in a normal size. I've had some people mention that before, and he can help you if you join to fix that. But you should be able to see the class and even any charts I have in a full screen, yes. So that's just a technical issue. But I can't tell you right now how to fix it. I'm sorry. What else? So like I was talking about, trade with the smart money. Very important. Oh, Rick just gave you the answer. Rick's in the room. He says, hit the square top left. There you go, Paul. You can try it. Rick's in the room. He said, hit the square top left. See if that fixes it. Thank you, Rick. Anyways, institutional money is the key. Trade with smart money. Follow institutions of the market. Make good choices. Learn to work smarter, not harder, to reach the income level you desire. Making a living trading is achievable if you set yourself on the right path. The longer you wait, the more you're pushing out further success and achievement of your goals and your own financial success. And again, it's almost spring, but time keeps ticking away. I honestly can't believe it's March. Are you on track to achieve the goals you set for yourself this year in trading or your finances? Again, the market keeps moving. 2026 has been a volatile year so far. It's been busy. It's been active. Every day, something happens. Every day, time in the market marches on, and you've got to get on the right path of success. I wouldn't put off learning if you want to do it. This way you have the rest of the year. You don't have to feel so rush. And the next earnings season doesn't start till after Easter. So you'd have the whole next month to focus and learn before earnings season starts, which is typically a very busy and profitable time to trade. And a lot of people I know are trading and struggling right now the last few weeks or even this year that have been trying to go long a lot. You know, if you realize that you need to learn something new, you're doing something stale, you know, try something else. You can learn my method. You want to have a good year this year. Oh, he just said the top right. Sorry. Paul, he's saying the top right. I don't know. I'm not a computer person. I can read charts. I'm a good trader, but I'm not a computer person. Anyways, how badly do you want it? You want to do well? You want to succeed? You want to be different. And unfortunately, you do have to be different if you want to do well. You know, I mean, it is what it is. You got to go sometimes against the grain. So empower yourself today. The Golden Gap course is a complete system to use to trade. You'll learn all the points in the class. You'll learn all the entries and the exits. So the class is called the Golden Gap course. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. So the class from March is not till the end of the month. It's March 28th and 29th, 9 to 5. Cost of the class is $69.99. Again, it's a bearish system. You will learn to short. And again, if you want to sign up, you can email me for sign-up forms. But I am doing a bearish special this week through Friday. If you want to join and start trading before the class, again, you'd have to follow me in the room, do the class in March for the bundle. You sign up, you get 3 classes, the Trends, the Gap Options course, and the Golden Gap for $89.99. This is a savings because you get the 3 classes, and then you get all the subscriptions free to the end of this year, mentoring sessions with me, and this ends on Friday, 3/6. And then you would do all of the classes. Any questions about that? Any questions from anyone else? Paul, I know you've been following me a while. I don't know if you have any other questions. Pat, I don't know if you have any questions. Elizabeth, I don't know if you're new. Jesse, I know you're following me a while. I don't know, Jesse. I don't know if you're ready to trade or not. Richard, do you have any questions? Ken, I don't know if you have any other questions. Ken, I know you want to do options. Went a little bit over here today. It's 5:30, but it's fine. Let's see where we are in the market. Oh, we're just flat. Doesn't look like anything's happening here tonight. Looks like we're just flat. Again, there were no earnings out tonight that would have affected the market. This is all going to be economic data driven and the news cycle. Rick says, take the course. It's worth its weight in gold. Oh, that was so sweet, Rick. Rick just did the class in February. And you didn't think you were going to make it through, Rick. But you did. Rick didn't want to learn anything. But don't you see that doing the class, because Rick was trading before he did the class too. Don't you see that doing the class has helped a lot? Don't you see that it makes a big difference now instead of just taking the trades blindly? There was something else I was going to say. You can see the trade. Meaning after you take the class, you see the trade that I'm calling. Is that what you mean? You can see how I'm calling it. Yes. Yep, it's very important. Very important. So we'll see how we fare in the next week, Rick. We'll see. Listen, have a good night, everyone. If you're interested in anything, email me here. If you have any questions or if you want to sign up. And have a great night. Stay safe, everyone.